Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 10th of May, 2017, pushing 1:55 p.m. Central Daylight Time. Okay, we leave the office and all of a sudden the president fires FBI Director Comey. The markets react. Gold takes off to the upside. Silver market, stock markets break. Nobody knows what to do, and then people start rethinking what this all means. And at the end of the day, I think they come to the conclusion that it's going to be a mess for a long time, but just what is there? And that's the problem. So by day's end today, things are settling back to normal. Actually, gold settled today at 1218.90. Silver just about here from what I saw. The dollar was down initially, regained all of its losses, and the euro's back down on the day, as is the yen. And the yen got up to 88.12. It slipped almost 60 points since then. So the safe haven buying, which even went into the bonds and notes, came out of the market. And while the event is it's not a non-event, it's not the end of the earth. It's not an impeachment at this point. It's not a special prosecutor necessarily. It's everything we've seen with the Trump administration, still a total mess as the Democrats keep trying to get rid of everything he's done, including him. It's one way to look at it. The other way, the man keeps making lots of mistakes. The Democrats are going to say, we got the wrong guy in office. I mean, I'm not trying to be a politician, and I hope that you all understand that. When I write sometimes, I feel that maybe you think I'm partisan. The reality is if you're going to trade futures or stocks, you got to pay attention to politics because they come into play. Tax cuts, I can go on and on. All right, so let's talk a little bit also about energies. Today the API numbers came out, and I hurrahed it because what you saw was a complete discrepancy with the EIA number from the API number yesterday. They did not show a build in gasoline stocks. They showed a slight decline. And we've been looking for that to begin for the spring and summer driving season. With that, the market popped up, and this is a sell-off. It was up almost 6 cents a gallon, and you're up $1.40 a barrel sitting here in the crude. And with warmer weather on the horizon, suddenly the nat gas is coming alive as well. But let's go to the gold market. The one thing that I pointed out yesterday, and I'm going to stick right with it, is the market is probably caught between the 18-week moving average of closes, that's the red line, and the green is the 100-week. The market bias is now down because prices are under that, and it is not a trending market. You have a higher high and a lower low pattern. There is no trend, bias is down. When you come to an area chart of closes, you got a very feeble $2.80 rally today. Big deal. That's not much of a rally. So the down thrust is still very much in place in the market. You had an inside day today, and that's often by chartists called a pause. It's not necessarily an omen that you're going to reverse to the upside. It's a pause, and that's all that it is. The fact that the market's closing near the low of the day means what does it do? Does it have the power to get under the most recent low and carry the trend even further down? You'd have to get under 1214.30 to do that. Now, the number right now that traders will be focused on is not getting back over 1236. Why? Because you have a clean trend. Traders look for trends, and they define trends almost universally. I can't say it's always, but almost, as a pattern of, in an uptrend, higher highs and higher lows, and in a downtrend, lower highs and lower lows. That's what you have. You look at the number that would break that, and you say that's when the market loses its trend, and right now it's 1236. Tomorrow that number, if we take out today's lows, could become today's highs, depending on which way the market closes tomorrow. On the moving averages, all you did today is previous theoretical support of the 100-day moving average of closes became theoretical resistance at that number. Now, there is a positive here, and I want to give it to you. The first challenge after a long time of hitting an 18-day average, be it to the upside or the downside, just show you back here, doesn't often stay that way. That's all that I can say, all right? So it's one of the things I look at as a chartist and try to measure. The negative on this chart is that the 18-day average of closes is now under the 200-day. So that is a bearish formation in the chart as well. This is a big resistance area in the market at this point. When we take a look at Bollinger Bands, the market has been riding the Bollinger Band, moved to the right-hand side, and can easily go for the lower band again. In other words, there's nothing bullish on the chart, and adding to that, you now have the embedded reading. So this market's fully in the bear camp, and I'll say until the red line closes back over 20, that's where it stays. You know, I'm doing right now something on the MACD, and I'm creating libraries, video libraries, for traders. And you're always looking at convergence, divergence. The difference in MACD in this is you're measuring exponential moving averages and the differences in when they crisscross each other. I've given you the secret of them. That's basically it. Well, this doesn't work that way. It works a slightly different way, but an important different way, because I think it better defines bullish, bearish, and then locking in a trend, and that be it to the upside or downside. Does that mean you can't use both? Absolutely not. Maybe that's a trick of the trade too. But in looking at this market, still very bearish at this point. The gold-silver ratio, first time that we've had a close back under a previous low close. In this whole run-up, first time. It most likely means that you've about stretched this ratio at this point to the point where other traders are thinking it's gone far enough. Not telling you that's a trade or not. That's what I'm telling you, how I'm reading the current action on it. You'd have to get back over 75.69, and even if you did it right now, you'd still have a lower low close and then a higher high. So I do look at that on these charts. On the ETF in gold, all you did is rally back, just like in the futures, to the 100-day moving average. You move to the right-hand side of the Bollinger Band, and you're embedded. It's all still bearish, but again, it's your first challenge under this, just the way you were here. Will it stay there becomes the question. You did not have the bearish crossover of the 18 and the 200-day moving average of closes. In the gold miners, you had past tense this crossover, but I want to show you something. This market, the miners, has done something super important. It lost its embedded reading. It's, I think, saying it's going to go up and challenge this area. So this market has a swing line that's got higher lows, higher highs. It's not in a bear trend. It has downside bias, but the kicker is when you lose the embedded reading, you often make a run to that 18-day average. So I'm looking for that market and the 18-day average to come together. Whether that's just a, if you will, a reaction to a big break, or the start that maybe this is going to lead, and it often does. The miners can lead what the product does. Interesting take on it. In the silver market, we have the fully embedded reading. You got the lower highs, lower lows. I think the bears were out today selling this market aggressively. We'll see if I'm right. If I am, I would look for lower prices on it. I think the same thing's happening in the SLV, the ETF, and I think that is going on. So the gold and silver are not looking good at all. The copper market stays weak, and if you looked at the Chinese PPI numbers that came out today, it's Producer Price Index, they are falling. So their own production and everything in their economy is tightening up. I've mentioned this over and over, and you continue to take one of the big markets that they import, copper, it's coming down. They're the world, they use about half the world's copper. In the platinum market, you got a small bounce. You have the embedded reading. Until you take out 925, I think you're going to have sellers in the market. Now, there's a small problem with today's close. You do have lower highs and you had lower lows, but with today, you've got a higher low and lower highs. In other words, you're beginning a program of narrowing in the prices. This rules the day, the embedded reading. But if you lose that, I would want no part of the short side of that market. The Palladium challenged its 18-day average today with the downside momentum still in place from the stochastics, lower highs, lower lows. As I told traders in my morning update, I think the pros are going to sell the market there, but the risk is large because you're not wrong until about 8:18. That's a heck of a lot of dollars to risk on it, but that's what I think they're doing. What else do I think now? Wouldn't be surprised if they got out by the close. They're going to notice what I did. Higher lows, lower highs. So in this market and in the Palladium, would you want to sell rallies, or do you think the pros want to sell if you take out yesterday's lows? My instincts are, that's all that they're based on, they're not going to want to sell the rally now. They'll want to sell the continuation of the break because that would give you even further lower highs, lower lows. That's how I think. Sometimes you want to sell rallies, sometimes you want to go with flow, and I think that's what the market's saying. In the dollar index, notice how the dollar index keeps to the upside. Now, it was down hard today initially, and where did it stop? Well, it didn't make it to the 18-day average. It got to 99.25. It missed it by 7 points, but with the momentum pointing up and the support there, the market was able to find something. If it can continue this rally, the 100 level might be where this market ultimately heads. And remember, I think the market is now focusing on what the Fed does more than it is on this day-to-day noise in these markets right now. And I'll call a lot of noise with the firing of the Fed FBI director. I think it's the only one fired that I can remember in my lifetime. He's the second one. There's 2 of them that have been fired. That's not very many. Wow. All right. Let's talk about something that you might want to look at. You know, we're talking about metals here, and believe it or not, there is a seasonality to metals. And the Moore Research Center covers that. Now, seasonality is a tool like a moving average or anything else. You should never use one tool on its own. But do you not pay attention to the tools? No, I think you do pay attention. So they've said that we can offer you 2 weeks to their website where they have interactive maps. You can look at spreads. You can look at individual trades. You can see how they've done over a 15-year period. They have interactive charts. You can look at what bear years, neutral years, bull years, or all of them together look like. You're going to get a user ID and a password from them. How do you get access to all this? Well, you call my staff, 866-973-2077. You can also go to our website, www.iraepstein.com. You'll see a carousel spinning on our home page. It's got all our free offers. You can click up here. If you're watching me on YouTube, you'll see the icon in the corner here. Just click that on. The form will appear. Or underneath us on many websites, it says, click here for Ira's free information. Click it. You'll see the form. Fill it out. I'm Ira. You have a great day, and I'll see you later with the end of the day financial video.